Now, in the years since the global financial crisis began, cash has been king, with Australia's banks courting the cashed up with attractive deposit rates. Interest rates are coming down, so is the party over, and what can you do about it? Here's Philip Lasker.
You won't find too many people complaining about lower interest rates, and nobody wants to hear from those that do.
We can live with it. I don't think I need to scream and shout.
Oh, for me it's bad.
Why?
Because I need the interest.
The Pensioners and Superannuants Association says rate cuts don't really affect low-income pensioners on a full-rate pension. It's worse for those slightly higher up the income ladder with money invested who opt for the safety and stability of bank deposits. They've just received a pay cut.
And you have to make do with less money. Also, it tends to be the case that when interest rates go down, the economy is stimulated, which stimulates inflation, which means higher prices.
The combined impact of weaker lending growth and falling interest rates may take some of the heat out of the deposit market, but there'll be
emphasis on sticky retail deposits as opposed to more hot money, more sort of institutional short-term funding.
Nobody's expecting an exodus from deposits as interest rates fall, because volatility will be a feature of the financial environment for some time, and there is a way to play the market in a falling interest rate environment.
We recommend clients take a laddered approach to cash and fixed income. So what I mean by that is they spread out the maturity profile of their investments, and in that way, even if there is a cut in deposit rates, it'll only be a portion of their income that gets impacted.
And believe it or not, the current epicenter of the global turmoil can turn up some opportunities close to home.
We actually think that some of the initiatives coming out of Europe, in particular, the increase in Tier 1 ratio for banks to 9% could actually force some of the banks to offload assets. And if you're a bank CEO sitting in Europe and you're looking at what might be a non-core asset, and if you see any Australian fixed income in there, I suspect that might be coming out, and that could provide a buying opportunity for investors.
Risk-averse investors probably prefer the games they know, games that can be played a little closer to home.